record on here. All right. So today we're looking at, as you would have known, or rather you would have seen from your detailed course outline, that we're busy with the cycles. It's basically the bulk of the content that is covered at second year level. All right, attendance is quite very poor, 49, or rather 48 if I exclude myself. All right, that's not a very good sign, and it shows from the revenue and receipt cycle that was included in your assessment, what you call this, assessment 2. You know, I wanted to ask, you know, what are the difficulties around having to study the cycles? Maybe just if I can just get an indication, or if, what difficulties do you guys think that you face when studying cycles? You can react, or you can drop me a chat. Obviously, the chat is going to come straight to me and I'll read it out. Or you can react and then I can just unmute. I just want to get an indication or a feel of how are you guys studying cycles? How are you conceptualizing cycles? How do you understand cycles? Or you know, where do you think you may need help around cycles? Just a reaction, so that, because you see, if you don't tell us where the issue is, we won't know. We might preempt based on past experiences, and I've been doing that quite very well. Even right now with this cycle, I'm actually going to preempt some of the things that you need to understand. But holistically, where else do you need help around cycles? I just maybe you guys will tell me as time goes on. That question just remains as is. Okay, Mohammed, let me give you a thing so that you can. Okay.
I'm able to unmute.
Yes, you are unmuted. Yes, yeah, go ahead.
I think what works for me is those functional areas. So they're quite generic kind of approaches. If you just understand them, I think that is what makes it easier for me.
Yes, that's what I want. That's what I want. I want you to understand this. Because Muhammad, while you're there, did you write assessment 2?
Yes, I did.
And how were you expecting a case study around online advertising?
No.
Absolutely. You know, most of you were expecting stuff on sales and you know, at the actual selling of a product. But the reality is, thank you, Mohammed, for that comment. Thank you so much. That's basically where I want you to be, to understand. And you will see when I start this chapter as well, at how I'm going to frame you to with the context within which I want you to thread carefully within. So basically, the thing is, when you guys write your CTA and you then decide to go and become a trainee accountant, the true fact of the matter is you are not going to be doing anything that's accounting related or preparing financial statements or whatever the case may be. It's a little bit windy outside, so please let me know if my network is bad. It's very windy out in the South Coast, and my network might be affected. So you're going to be getting financial statements from the CFO or whoever. Your job will be to audit. That's the job of a trainee accountant. That's the job. That's the main function from which you're going to have to master for you to become a chartered accountant at the end of the day. I should know. I've been there. I worked for PwC, did my articles there for 3 years. I know exactly what happens. Well, you do prepare some financial statements based on your audit. And then you obviously help the client as well to say, you know, put in that I don't disagree with that figure, or if the client doesn't change the figure, you raise a query. If the client again still persists, then it goes on to your opinion. So that's basically what happens. I hope you guys understand what happens, because I really want you to understand. If you think that you're going to be crunching numbers and preparing financial statements as a chartered accountant, absolutely not true. It's a very, very small amount of time that you're going to spend doing that. It's auditing, coming up with an opinion, assisting rather the audit partner to come up with an opinion. That's the main thing that you're going to do. Malemo is saying, maybe the problem is that we try to memorize the controls instead of trying to understand the reason why the control is there and its objective. Absolutely true. I agree with you. I agree with you. And you will see, Molemo, when you know, now that I'm going to start lecturing this chapter, you will see how I'm doing it. It's so casual. It's not, I'm not fixated on the book, but I want you to be as open-minded about it as possible. But where I'm going to start is purchases and payments. Let's just understand that first. You are purchasing, you are paying. So with all of this information, I want you to receive this information and store it where, you know, you have to be skeptical as an auditor. Use your own professional skepticism when you're looking at anything that's got to do with purchases, when you're looking at anything that's got to do with payments. And, you know, there are three triggers around purchases and payment. First, you are acquiring a product, either for resale or for whatever the case, but, you know, you are in a business, you are purchasing. And then when you purchase something, it needs to be recorded. And when you've recorded something, you also need to make payments towards that. So I just, again, very clear, easy stuff to understand. And I really want you to understand there's nothing to cram here. There's nothing to memorize. Just understand what is the nature of this chapter. The nature is you are buying, you are recording, and you're paying. All right. What are you buying? Various other items. You're buying raw material, manufactured, wholesale, or other stuffs. You know, again, just to further solidify the whole concept around purchases and payment cycle. And then now there are, you know, varied nature when it comes to this cycle. There's different documents that need to be used, accounting records that needs to be posted, not withstanding, obviously, the internal controls that needs to go in there in both purchasing and paying. There must be proper controls that are there. Now, the triggers around purchasing is the fact that there must be something that initiates you having to pay. So in this cycle, what initiates somebody to acquire or to buy, what initiates you to actually buy is by having somebody or some department or some person requisition, meaning they ask for a certain product to be bought. And the way they ask for the certain product to be bought is by filling in what is called a purchase requisition form. Purchase requisition form. So you are requesting something to be bought. And therefore that form will initiate that. And obviously when everything has been done and the goods have been delivered, what initiates payment is for your company. Now, you're not an auditor. Let's just take ourselves as if we are working within a company. What will initiate you having to pay is by virtue of having to receive an invoice, because that invoice tells you that you're owing somebody. Again, simple, clear, straightforward stuff. Now, a typical transaction in a purchases and payment cycle is when you purchase, you're going to have a requisition. And then that requisition will obviously go to whoever supplier whom we're buying from. The supplier will have to order the goods. Okay, so we're ordering the goods. All right. Either you say we've ordered the goods, or we've now sent the requisition, and that now is an ordering, whichever case. Then what happens is they will have to deliver the goods. So you have to take custody of these goods and then record this purchase. Accrual basis. That's how we account. We account for everything on an accrual basis. Now, when you pay, which is the second trigger, there needs to be, you need to prepare payment, make the payment to the supplier, and then record that payment accordingly. Obviously, when you prepare payment, you receive an invoice, blah, 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 blah. It goes through the approval stages. EFT, if it's EFT, we're no longer using checks. So I'm definitely not going to be testing you on or assessing you on checks. Anything that's got to do with checks, no, forget about it. But I'm going to be assessing you on payments, either cash or all the other forms of payments. All right. Now, there are major accounts in this cycle. I don't want you to lose sleep over this, because, again, you'll be tested more on the accounting side, not on the auditing side. But it's for you to understand that there's periodic, perpetual, and all of those other things, how to calculate cost of sales, opening stock, plus purchases, deduct closing stock, add your customs, or whatever the case. You guys know all of those things. You do it in accounting, so I'm not going to test you on that. Also, there's credit purchases. We have to raise a creditor accordingly. Easy stuff again. Why? Because that creditor, ideally, that invoice needs to be paid for within 30 days. You understand, obviously, accruals that we record when a transaction occurs, not when we pay or when we receive cash. So if we haven't paid, you have to raise a liability accordingly, like water and electricity or whatever the case may be. Easy stuff. And I hope you guys can just follow. By the way, I'm making it so casual because I'm going for your understanding. That's where I want to go. I want to really go for your understanding, because when I come up with a case study, I don't want anybody to be confused and try to be fixated on the book, what the book says. We understand that, the entire BCom accounting degree is just one of those degrees that we test more of the stuff that you will find in industry, meaning when you work. But obviously we test it now via case studies and everything. That's, BCom accounting. That's how it is. Now, also, you have to understand whether this a recording that we are doing, is this an expenditure or is it something that needs to be capitalized? Meaning it needs to, it's going to increase the value of the asset if that's the case, capitalization, or is this an expenditure, water and electricity? Or was it purchased overseas, or where there's different currencies that needs to be accounted for? There are other controls, again, that comes into play with that. So those are other things that you need to just take note of. Excuse me, I'm just a little bit sick with flu, with the weather. Now, description of the functional areas, you understand that there's requisition of goods or services, then you order these goods and services, you receive them, you record them, you prepare the payment, you make the payment to the supplier and record the payment again, just like you did when you were recording the purchase. And if there's any returning of goods that happens as well, that needs to be adjusted for. Again, easy stuff. That is why I'm just moving very swiftly. Now, when you are recording, if you've received a goods received note, it's that note that you sign to say, I've taken custody of the delivered goods, all right? So that needs to go to the purchase journal, and it goes to the general journal, to the trial balance and the financial statements, because the ultimate goal is the financial statements where management are asserting something. So all of these things, they are interconnected. If it's a payment, again, EFT or cash or otherwise, it goes to the cash book, goes to the general ledger, trial balance, financial statements. If it's a debit note, meaning we're returning the goods, it needs to go to the purchases returns general ledger, and it's adjusted for accordingly to the general ledger. If it's a credit, if we purchased on credit, we purchased on credit, there's two things that needs to happen there. Is we need to receive a statement or an invoice which is reconciled with our own creditor's ledger. And obviously it is recorded as well in the general journal, the reconciled amount, and it goes through to the trial balance and the financial statements. Again, easy, straightforward to understand, because I want you to be so open-minded so that when we talk about controls and weaknesses and recommendations, you need to be that open-minded. Obviously, I'm going to do the what do you call this thing now? The assessment to feedback report, and I'm inclined to actually go to the extent where I go deep at length in as far as how you should have answered your essay questions. But we'll cross that bridge when we get to it. Don't worry about it. Then there's supporting documentation that comes with having to, with the cycle. Any master file amendments, computerized systems only if we need to change, maintain the creditors database, our suppliers from which we buy from, or whatever the case may be, a purchase requisition. Some companies require 3 quotations before a purchase order is done, and then there's a supplier delivery note that comes with the goods, and obviously we sign the goods receive note, and then the supplier sends us an invoice. Subsequent to an invoice, the supplier sends us a statement, and the remittance advice is basically when you are paying for something and then you are indicating that you're paying for invoice A and invoice B. So you indicate that on the remittance advice or a proof of payment. And if you return the goods, obviously a goods return voucher and the debit note. Straightforward stuff. So those are some of the words that you're going to come across with when we look at supporting documentation. When we look at recording, you should hear words like purchase journal, cash payments, purchase journal, or credit, cash payments journal when we now pay, purchases returns when we return. The general journal is obviously, any journal, creditors ledger when we purchase on credit, and also the general ledger, meaning collating all the transactions under a separate account. Computerized, there's your creditors master file and inventory master file, because ideally you'll be buying inventory. So all of those are most of the things that you will understand when we talk about having to report and reconcile, supplier statements and creditors reconciliation as well. Because, you might find that you would purchase today, for example, in many companies, they would purchase from one supplier multiple times in one day. So it's not going to be one invoice that you're going to be receiving. It's going to be multiple invoices. So that needs to be reconciled as well, especially when you receive your statement, and make sure that the statement is correct. Reconcile it together with the invoices that you would have received for each of the purchases that you would have made. All right, easy peasy stuff. Now, a transaction flow under this is, okay, let me just do this because I can't see. All right, the transaction flow that you ideally would have to get accustomed with under this is, under the purchase requisition, there is that it is initiated because there is a need for having to buy certain goods. This need has been identified with the entity. So you have your purchase requisition, and then you order the goods. When you order the goods, the procurement department has to receive the request for the purchase, meaning that purchase or requisition goes to the ordering department or procurement department, and they have to identify the suppliers that they will have to buy from, and obviously looking at the quotations that would have been received, the likelihood is they will buy from the supplier who has quoted them quite relatively a lesser amount than the other suppliers. It's stuff that you guys know. When you now receive the goods, the supplier will have to deliver the goods. These goods will have to be received by the warehouse, and they have to be checked and made sure that it's the goods that were ordered. They are in good quality. There is not broken or anything like that, missing, whatever the case may be. And then they sign a goods receive note. Ideally, that goods receive note, there will be 4 copies, because one will have to go to recording department, and the other one is filed, and so forth. All right. And when we record, obviously we record on the strength of that goods receive note to say, yes, these goods were delivered, because the goods receive note will depict the goods that were actually received as per the delivery note. All right. And then immediately after that, payment needs to happen. So we can either send out a remittance advice where we say we are paying for these invoices. These are the invoices that we're paying for. All right. That's how good a remittance advice is about, because it also helps in having to record the payments, because it means that with all the open invoices that haven't been paid for, at the end of the day, you need to be in a position to record this payment accordingly, thus removing these creditors from the books, because once you pay them, they no longer become your creditors, or the amount that is being owed to those creditors reduces each time that you make a payment. And also, the last step is, the accounting department is having to record and make any adjustments in the accounting records as to allocate the payments that have been made. Easy, purchasing, paying. All right. Then, now when looking at this cycle, what could go wrong? You need to, that's what you as an auditor, okay, there's a chat. Shavani saying, hey, say GRV is the same as a goods received note. Absolutely. It's an abbreviation for the goods received note. Same thing. All right. Thanks, Shavani. So what could go wrong? Possibly what could go wrong in this cycle? It involves, a lot of fraud, manipulation of account balances, and classes of transactions. So it hits both ways. There is classes of transactions, which is more which pertaining to the statement of comprehensive income, and there's also manipulation of account balances, which is more on the statement of financial position, because you would understand that if you're paying for an expenditure, it's water and electricity, it goes into your income statement. But when you are paying for having purchased something on credit, you're talking to the liabilities which are sitting on the statement of financial position. So it hits both ways. That's where the risks are. And also misappropriation risk, where there could be possible theft of physical cash. It happens. The one company that I audited, this lady was quite very good in such a way that she would prepare 2 payments using the same invoice, but different banking details, meaning that the one banking details will be the correct one that goes to the supplier, but the next banking details will be her own banking details. And she did that fraud very nicely, Shame, without being caught for quite some time, up until we came in and we caught her, and it wasn't nice after that, you know, because that's how it is. Fraud is nice once you're doing it. Once you get caught, it's not nice. It's like cheating, like those guys that collude and they ride together, you know, it's all nice and dandy while you're doing it, but you know, it's not nice once you get caught. You know, LAN is quite very, very, very advanced. Before we mark, we're going to start marking today with our markers. Before we mark, I run a check and make sure that the similarities in as far as answering is concerned. And it does pop up, you know, look at that student there with this one and that one. The answers, you know, the style, the language is similar. And obviously we don't go off by that, but we go in and we physically now mark and contrast and compare and all of that. And if I am convinced that, you know, there has been collaboration, you will then obviously get an email from the what's that thing? What's that name? From the proctor's office, where you will then go for a very embarrassing disciplinary hearing as a BCom accounting student, which is not a very good thing early on in your career, not a very good thing. All right, so the cash may be stolen as well, and like I told you, or fraudulently withdrawal from bank accounts, like this story with the lady who was preparing invoices, but the same invoice we're paying for the same invoice twice. It's just that the second time around it goes into her banking into her bank account. All right, and also this lies with your supply chain. Hence, most municipalities that don't get a clean audit, in most cases, the risk is normally high when it comes to their supply chain, because there's unauthorized purchases, there's payments made to fictitious suppliers, and whatever the case may be. So you as an auditor need to have that professional skepticism to say, what could go wrong here? And that's where I need you guys to be, because when you're being assessed on the side of an auditor. So I need you to really turn on your professional skepticism and so forth. All right, Luke is saying if the goods we have been ordered are stolen in transit, then would that affect the control in our purchasing? Well, no, because you see, look, in that case, they haven't been delivered. Only when you take custody of the goods is when all the risks and rewards are transferred to you. So, you know, in transit, you know, probably it's just going to be the company that has to deal with it, which is a very good question. It's a real thing, especially in South Africa. Yeah, it's a real thing. Very good question. So yeah, but when you've now delivered the goods and they mysteriously disappear in your storeroom, then you have a problem with your controls within the business, Luke. All right. Also, what you need to know when you talk about paying, it's either electronic. We are using the entity is a bank account to transfer money to suppliers. There's also proof of payments that may need to be sent back and forth. You know what, don't lose sleep over that, because it will be just in a case study form, in a sense, to say payment is EFT or cash or whatever. So there's different controls around it as well. But the control objective is, the main aim is to ensure that whatever transaction that happens within the business is actually valid, accurate, and complete. And if obviously the consequence of that control objective not being achieved is the fact that there is misstatements of amounts in the financial records. So now the assertions that the management is asserting at the end of the day, therefore, becomes a little bit not true, because there's that misstatements of amounts in the financial records. All right. Also, the control objective, unpacking it further, it goes around having to purchase, having to make any purchases, adjustments if we're returning goods, or also making payments. All right. So how does this assertion unpacked come to play? When we're saying a transaction is valid, it's because that we know that we've recorded purchase, we've implemented controls to ensure that transactions are actually genuine and they have been authorized. So not only that it's a genuine transaction, that authorization as well is important. It's an important component. Just imagine if you can anybody can initiate a transaction in any business, without any proper authorization. What could happen? You'd find cases where one municipality that I audited, where they ordered 3 tractors. It was supposed to be 3 tractors, put in the asset register as 3 tractors, only to find that it was state-of-the-art Range Rover cars, all 3 of them. Obviously, it was easy to find out. These were new vehicles with high values. And when you are auditing assets, there's what we call an asset verification. And normally we verify assets by having to target. When you target, it means that you choose the assets with the high amounts. And then you just, based on the total of your asset register, if your asset register is sitting at 100,000, then you will choose assets, high-end assets to the value of about 80,000 to get 80% confidence on whether those assets have been bought. But that's the asset part. So here, also, if it's accurate, is it recorded in the correct amount, correct quantity, all of those things. Check the arithmetic calculation, whether it's correct. And also, is it complete? So is it sequentially, are the purchase orders sequentially numbered and actually checked? Invoices, all right, to ensure that nothing has been missed. So whatever is recorded in the financial statement, there were no omissions or whatever the case may be. Now, there is a very strong link, as I said, between what happens in this cycle and the assertions that management or what management are asserting. First and foremost, in this cycle, you will most probably, it's more information system based, including, the accounting records, because we will record a transaction when you purchase in the accounting record. So the management are saying these transactions need to be properly subject to good internal controls in order to achieve that control objective of validity, accuracy, and completeness. So you can clearly see that these controls are feeding into our recording. And that information that has been recording goes straight into the financial statements, all right, at year end. And then by having to find that in the financial statements, automatically management are asserting something. They are saying that balance that you see of creditors is accurate and it's complete, or whatever the case may be. That transaction that we've recorded is valid, is a valid transaction, and it's accurate as well. And it pertains to the accounting period. All right. So without even them having to open their mouth and say something, they are invariably asserting something, meaning they are saying something. All right. and it's better broken down even further. Please go through it, this assertion thing, because maybe for assessment 3, I might even test you on assertions in as far as this cycle is concerned. Maybe, I don't know. So it is tested very, it is explained very nicely. Now, there are internal activities that happens in there. There's documentation and recording that happens. Documentation from a requisition to recording. And these transactions need to be properly authorized and approved. Now, also equally important is a clear segregation of duty. Just imagine if somebody is requesting something, meaning preparing a purchase requisition, and they are also ordering, they are also receiving the goods. I don't think we'll take it as far as having to initiate payment. Let's just say they are purchasing, they are ordering, and they are receiving the goods. They can order goods and they can take those goods with them. If there is no segregation of duties, there must be certain person who initiates the requisition, different person who approves that requisition, different person who who does the ordering, different person who does the recording. And when it comes to payment preparation, separate person, loading of payment information, ideally separate person than that person. Oh, yes, separate person from that who's authorizing the payment. All right, and so forth. Also, there needs to be very strong controls, internal controls around accessing certain certain points in this cycle. Not anybody should have an access into the storeroom. Not anybody, because this is the storeroom where all goods that have been purchased are being stored. Not anybody should have an access to the finance department. Somebody who's in the purchasing department should not be involved in payment. Not be involved in payment. And you guys should know. Use your own professional skepticism as well. And even in the case study, you see the problem with the case study. Okay, let me do the last point, and then I can tell you what's the problem with the case studies. Remind me if I forget. And there should also be somebody. There should be proper independent checks and reconciliation of creditors, sub-ledger with statements to ensure that what the supplier is saying we owe is actually what we owe. All right. And then the last page, it just points you to the right pages when you want to look at purchase requisition, when you want to look at ordering in more greater detail. But as I said, just understand this cycle. Just understand it, and because really it's unlikely that we're going to come up with a case study that's very close enough to the ones that are in your book. I'm not saying they are not good to have very good, to have your tutorials as well are very good to look at. Because you can see somebody who doesn't do their tutorials, or who do their tutorials very, poorly, very, very poorly. When last week I met one student who was saying, I don't know what materiality, where that figure comes from. And it was very clear that the student hadn't, I had a very quick Zoom session with the student, and I said, look, go and do this, do that, do that. Nothing new, something that I have told you guys over and over again. And I was it was quite nice to get them the email the next day to say, oh, I went and I did XYZ. Now I understand where everything comes from. And it just goes to show that if you do everything the way that we say, please do it like that. We should know. I've been lecturing at UKZN since 20, remind me, I'm old enough. I've seen a lot of SRCs come and go. I've seen a lot of students come and go. Others do well, those who listen to us, they do absolutely well, exceptionally well. And then there's your odd ones who think that they are smarter than us by having to tell us that, we're not doing our job very well. They become students and lecturers at the same time. I don't know how that works. But you find your smart students who always want to be a student and a lecturer at the same time. Tell you that I'm not satisfied with this mark. I'm not satisfied with my mark. When I get a question like that, while I get annoyed, I also feel for the student, because it shows clearly that they are not in any position to absorb anything that we are saying, because they believe that they are right. Last year, I had a student who told me during a lecture that, what was the thing now? The student said, of course, they wrote in Zulu, and they said that I favor students when I mark. And you know what, when you mark, your student number is not there. It's not even on LEN. I think I met 2 students last week who were consulting, and in the midst of consulting, I said, I wanted to go and look at how they were performing with their assessment. We ended up having to open their assessments and so forth. And, they get very surprised. They get absolutely surprised, because they think they done very well only when you show them, how we've marked. And they actually, I've never actually found a student in auditing who says, okay, no, I'm right, I was right, you guys are robbing me. It's always, we are even more lenient. The 2 students that I've met, at the end of the day, it was discovered, and they also realized that they should have rather received even less marks than they got. But you find the smarter ones who say, I'm supposed to have passed, I'm supposed to have done this, I want remarking. Lucky enough, there's no remarking because it's continuous assessment. So I'm happy for that. Also, there's no script review because it's online. But the way that we do our processes within auditing, it is absolutely credible. So credible in such a way that I'm not even scared. If anybody says, we're robbing them or we're doing this and that, without a doubt, I always say, well, it's just unfortunate that whoever is going to be remarking it will have to be me. But I'm in that position where I can say, find somebody in 3rd year to remark and see how what's the mark that you're gonna get. What's the mark? Because even that student last year, he actually said something that was that I didn't appreciate. I wanted to take him for disciplinary hearing. Unfortunately, we disagreed with translating Zulu into English, because I was putting in a case. When translating it into English, it's not an insult, but when reading it in Zulu, it was an insult. So we ended up going back and forth with the proctor's office. And normally we don't want to put in a disciplinary hearing when we know that we're not going to win. In most cases, we definitely show that we're going to win. But but not luckily, unfortunately, because the student was so hell-bent on not listening to me or listening to what we say, the student didn't pass because he thinks he knows better. And I don't want you guys to find yourself in that situation. I want you to really absorb, really come in, with an open mind and absorb the information. one thing I can tell you is that I want each and every student to pass. There is no way that I don't want a student to pass. I'm gutted if any student fails. I'm gutted. If you are not satisfied, I'm even more unsatisfied than you are. All right, I was gonna say something. Please remind me. Oh, I was gonna say something on case studies. You see, with the case studies, and it's unfortunate, it's the way that we're supposed to put our case studies. The way that we put our case studies is, it appears that there's no problem. Because that's what you're gonna find in industry. You're gonna go and audit a certain company, and the CFO and the financial director, they're gonna give you a very nice story. Oh, we do XYZ, we do it like this. This person does, they're gonna look like they've got everything in order. They've got all the processes in place. Then you need to use your own professional skepticism. For example, the case study that we did, the marketing person was having access to the finance ID and password together with the marketing manager. That's unheard of. It's not supposed to be like that. And some of you picked it up. I looked at a scan through, the marking just to see, preempt. Some of you picked it up, and some of you didn't pick it up. And it was just right there in the case study. But the way it was put, it was like the marketing manager, blah, 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 using the ID, the finance ID and password. And it looks all rosy, as if there's nothing wrong, but there is something wrong there. They're not supposed to have an access to a finance ID and password function. Any questions on this? Or rather, let me not say on this, any questions on the cycles, on conceptualizing the cycles, understanding the cycles? Do you guys understand how you're supposed to study these cycles? Are you going to do that? I'm not asking you a lot of questions because I know most of you didn't pre-read. You're supposed to pre-read, come for a lecture, ask me a lot of questions until my head burns out. And then you go and, read again to put everything into perspective, and then attempt your tutorial. Go for a tutorial. We're not saying you're going to get everything correctly, but whatever you've gotten correctly, mark yourself objectively during the tutorial. Then you get your tutorial solution. What you do again, you redo the question, not look at the solution, redo the question. And then look at the solution and mark yourself objectively. All right. Depending on how many marks you've received, if you've gotten 50, redo the question again, put away the solution and redo the question. And you will see how you're going to start to understand. You don't have to redo it instantaneously, redo it the next day or the other day, and then mark yourself objectively. You will see how much how many marks you're going to be getting each time you do the solution. Because only a child, only when you are 7 years and below, can I tell you something and you understand it and you absorb it. Only from somebody who's just newly born, or rather, let's just say 1 to 7 years. The whole thing. They say, give me a child 7 years and below, and I will show you the man. Once you're 7 years and above, you only learn by repetition. You learn by repetition because your mind has developed enough at that stage. It has stopped growing. The only way to grow your mind is to now repeat what you've been learning. Any questions on this before I end the lecture? All right, Piluentle, your class rep, is asking, do we have tutorials this week? No, there are no tutorials because obviously last week was test week, and during test week we don't have any lectures, and tutorials are always a week after. So your tutorials will resume again normally next week. with the purchases and payment cycle. All right, going once, going twice. Any last thing? All right, thank you very much. Have a good week ahead and a lovely afternoon. Yeah, no, nothing on the chats. Wait, something is coming up. Oh, Kerry is saying thank you. Thank you, Kerry. Cheers, take care.